Hey guys, Mike here. So today we get to look at your comments and try to answer questions, hopefully with your help as well out there, about Nvidia, China mess that's going on, but also one big story that I didn't really know anything about until one of you guys mentioned it. So I looked at it and I thought, well, what better time to make you aware of it? And so if you look at this right here, M-Town Lone Wolf tells us about the severe drought that's going on in the Panama Canal, which accounts for about 40% of the world's cargo ship population. So I looked into this, and it is absolutely true. This came out Thursday afternoon.
He says 2/3 of canal traffic is either coming from or going to the United States. But that flow of goods is now at risk because this 50-mile-long system of locks and lakes that connects two oceans is actually above sea level and doesn't run on ocean water.
No, it's fresh water from our lake, Gatun Lake, that's man-made.
And so you are reliant on rainfall.
Yes.
And generally in Panama, that happens.
It's one of the wettest countries in the world. But this year has been an unprecedented dry season. Our lake levels are close to the minimum.
Severe drought is drying up the lakes that feed the canal, plunging water levels so low they've had to cut the number of vessels passing through from 36 to 32 per day, delaying goods and creating a growing waiting room of ships out at sea. Some vessels are also being forced to carry up to 40% less cargo and slow down so they don't hit bottom.
So I'm surprised that hasn't gotten a lot more attention, because we remember what happened last time a ship clogged the Panama Canal up. And yes, I mean, if ships are being asked to carry 40% less and there's less ships coming through there, then yes, that can cause some pretty big supply chain issues. So it might be something to keep an eye on. Right now it seems kind of quiet as far as I can see. Let me know if you know anything about it, but now we have it on our radar and we'll see how it affects things. Especially, really the big thing is for holiday seasons. I did hear some of the CEOs for the big retailers saying they're really worried that we're going to end up having a shortage for the holiday seasons, and this is their biggest time. So this is the last thing retailers need right now. And that leads us to one of the biggest questions I get almost every video, and it is, what is that indicator you use with the volume on the right side? And if you have tray view, just go to the indicators right here. Type in VRVP. It's a visual range volume profile. You can click on it right there. You have to play around the settings, of course, and see where these are thick bars. I like mine a little thinner, so I just go in and make some adjustments and stuff that one of our members have recommended, and I like that. So this is the one I actually use. You can see it has thinner lines. You can see the volume gaps a little easier as far as I'm concerned. And so just go in there and play around with it, see what you like best and stuff. But if you need a account and tray view, look right down there in the description. There's a link right down in the bottom, as you can see. Click on that and enjoy it. Let me know what you think about it. I'm sure other institutions or whatever, if you're using Fidelity, if you're using Thinkorswim, they have to have volume profiles somewhere. So just look for them and see if you can find them. Now, Nvidia, of course, has been getting a lot of attention since earnings, from the big move up to the big move down. And I made the comment, you know, these gaps are going to fill at some point in time. And, you know, this person said, hey, not all gaps get filled. Just look at the past. And what I was really referring to was the giant 25% gap on Nvidia. Not all gaps get filled, but large ones like that normally do. It usually happens when there's a big downturn in the market. That's when most of these gaps get filled. But that's just such a big one. I mean, if you can think of any other stock that's had 25 to 30% gaps, never get filled, you know, let me know in the comments. I'd love to look at the chart myself, because I'm sure they exist. I've just never ran across them. Now, speaking of Nvidia, Sam here says, having a computer background, I have to say Nvidia will continue to prosper and do well. I believe Nvidia would be like over 1,000 by mid next year, 2024, at least for the foreseeable future. Nvidia does not have competition, and they are in a unique position to progress. And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And currently that seems to be the case, right? And remember, obviously it's going to be like a Tesla thing where they didn't have a whole lot of competition and then competition got fierce, right? And it's going to be the same thing with Nvidia. All these companies who are actually customers are actually also rivals. They will absolutely be trying to come up with their own chips. They know how to hire engineers and smart people, and this will be going on around the world. And so, you know, we'll see how long they can keep it up. The margins will stay great like they are. And then eventually when competition sets in, that could be 6 months, a year, 3 years, whatever it is, you'll start to see the margin shrink and stuff. But it will happen, because guess what? That's business. Okay. And so let them enjoy the ride while they can. And we'll see how long it takes for other people to actually catch up. Now, I thought this was interesting from Jeff Duke here. He says, Nvidia is cooking the books. And then somebody else said, I agree. My experience tells me something is off. And I want to make sure you're very clear here. It don't mean they're cooking the books, but understand all companies can use legal accounting practices and to stretch the envelope here during earnings, right? And what do I mean by that? And here's 3 of the tricks you'll see to boost like sales growth, for example. They'll pull forward sales. One of the most common tricks that companies use to juice their top line growth rates is to pull forward future sales. This is done by recognizing sales that would have occurred in future quarters in the current quarter. Why? Pull forward and sales increases current quarter revenues and current quarter growth. It lowers future sales. Another way to do it is liquidating deferred revenue. Another important metric to monitor with growth stocks is deferred revenue. Deferred revenue is a key balance sheet account that a significant amount of fast-growing tech companies report, especially subscription-based services. And the last one is excessive unbilled sales, probably one of my favorites. And this one says it may come as a surprise to some investors that companies can accrue sales without ever having to bill or invoice the customer. These types of sales are referred to as unbilled sales and are high risk. Since it's easy to grow sales, if you don't have to invoice and haggle with customers, unbilled sales can easily be gained by management to meet near-term expectations. And so like I said, as far as I know, there's nothing illegal about it. It's just accounting practices. And so it doesn't mean NVIDIA is cooking the books. Maybe they are pulling forward sales. Who knows? We will never know, right? But in this case, they'd be fools to do it because they've increased their revenue and their guidance so much. All eyes are on them, so they'd be a fool to do it, but they wouldn't be the first company. But, I don't know. Let me know what you think in the comments about that. But again, they can game the system legally if that's what they're doing anyway, because that's what a lot of other companies do. And that's why I tell you, when a company definitely misses earnings, like that, I'll tell you something. There's plenty of ways to fudge those numbers, okay, if they want to do it. So let me know what you think about down there in the bottom. Now, I can take criticism, and so I like this comment right here by Unrated Madness. It says, hey, Mike, your investing advice will always be lacking because you talk about and pay attention to the rain, but not the clouds. Try to see the clouds coming and wind blowing to predict the weather. Okay, also, temperature does not matter much because clouds tend to come from far off is what he says. And, look, I'm always looking to improve. So I thought this is what, looking at basically the daily and weekly and monthly charts and looking at rotation and sectors, things like that. I thought that was predicting the clouds. Maybe I could be wrong, but, hey, if you want to dish out criticism, guess what? Dish out some advice to them. So let's see what you use to actually see the clouds, whatever you're saying those are, since I'm looking at the rain. And, again, always looking to improve. Don't mind criticism. That's me every day trying to improve. So feel free to dish out some advice and the things you use. I'm sure we'd like to hear about it. And if anybody else wants to comment on that, feel free as well. I always try new things out. So just want to put that out there to you. Meat Puppet says, hey, Mike, isn't it illegal to manipulate the market like what happened today? And he's talking about the big rug pull. And why doesn't mainstream media talk about the obvious rug pull manipulation today instead of blaming it on other things? And the truth is, look, we know manipulation happens. We know who's running the market and stuff like that. But you got to understand about mainstream media, they're actually in the back pockets of these gigantic hedge funds. Why do you think they have their CEOs, their CFOs, all their analysts on there, and they're all treated with kid gloves? You've never seen heated debates on any of these financial shows, right? There's a reason for that because they get done working there. They go work for mainstream media a lot of times, or mainstream media, excuse me. So, you got to keep that in mind. That's why you got to be careful with mainstream media and use it selectively, in my advice, or that's what I do at least. So let me know what you think in the comments about that. And then we have a comment from Thomas here, and this was talking about when I was saying China's real estate issue is just pretty much a disaster. And as far as the amount of bank assets, which are basically the loans that these banks have, around $54 trillion and stuff. And so, he was saying the U.S. has approximately a population of 330 million people. China approximately 1.4 billion, not all adults, but debt to person ratio. And then what I said was I will pay more attention to the GDP per capita in China because they only have a GDP per capita of like 12.5 thousand. Compared to ours, it's 76,000. Compared to Japan, before they had their major slowdown, and it was 45K. So they were able to get rich before the slowdown occurred, and China has not. And so that's the big difference. Plus, China's different because their fortune's tied up in the real estate market, almost 70% of it. And their real estate market is a hot garbage mess right now from all accounts. And so, yeah, you may have your money tied up in these houses, but it ain't like you can sell them. They're just stuck there. And so keep that in mind. Now, another question about China was from Demake says, hey, Mike, can you explain why China is cutting rates to get their economy back on track and we are raising rates? And it's a great question, and there's just two different stories going on here, right? Our real estate market is doing what? It's tight. We don't have hardly any kind of inventory. Builders can't build fast enough. And plus, we're trying to actually decrease inflation. Plus, the theory is they're going after wages and stuff. So how do you do that? You slow down the economy. China, their economy is already slowing, right? And so what happens, this is why when you see them cutting rates, and what they're trying to cut rates on is the loans to get into the homes, all right? They're trying to push the banks, which they own, to make it easier because they have a huge surplus of real estate because they built all those ghost cities and stuff. And I forgot the millions of vacant homes they actually still have that have never been lived in and stuff. And so it's just a whole different ballgame right now for them. And so that's why they're cutting, because their economy is really slowing. And you see with ours, even with high rates, higher inflation, they just sent so much money to everybody, and everybody made so much money through 2021 and 2020, excuse me, that there's no reason to cut rates right now. Okay, I know it seems weird. And again, the theory I have, and some other people are coming up with too, is that they're trying to squish the rise in wages in America and push that down. How do you do that? You slow the economy down. And China needs to stimulate their economy. So they're doing QE while we're doing QT pretty much. Now another good one here about Benson about China is MCC specifically failed to mention if China's bank loans are in yuan or dollars. And they're right, that would make a big difference. And what I found is, I know in 2021, they said the value of the bank assets in China amounted to 46.4 trillion US dollars, almost 5 trillion US dollars increase to the previous year. And now we announced, what, 53 trillion? So that literally is dollars. Remember, we're sitting at 23 trillion, and we're a country that's literally based on debt. We love debt, right? So that's what our banks have, and they have twice that much. And so with a very low GDP per capita of their people, so it's just a different ball game you're working in here. And this is where the shadow banking part comes in. That's the stuff we don't know anything about. That's that company we kept talking about, and we have the same problem over here, especially in 08. And so that's where the big concern comes from, because there's so much thing you don't know going on behind the scenes in the shadow banking area that they've been doing, and we just don't know what basically how much they have on the books, how much they have in losses, what's going on behind there. And when they start missing payments and things like that, that's what starts to really worry people, okay? And so that's why all eyes are on China, and everybody's rooting for China. Trust me, nobody's trying to root against China economically, because it helps everybody and lifts all boats when they're doing well economically. And so now this is the last one on China here, but this is true. Darren says China is collapsing, and the only way to deflate it is war. You can see if you type in war is the fastest way out of recession. My spelling is horrible here. But when you click on this, and one of the first things you'll see come up here is war a solution to global recession? History shows that war always follows slow downturn or a recession. And that is absolutely true. If you go back and look, a lot of people will say what pulled us out of the Great Depression really was World War II. Right, we sent all the men off to fight in war, all the women in the factory, we were building stuff at record pace and everything. But really, when you look, anytime we have a slowdown or a recession, something that gets you out really quick and gets your GDP pumping is war. All right, and that's the big concern when it comes to China going into Taiwan, right? And so, again, there's so many things. I understand people keep asking, like, what's the big deal about Taiwan? Anything, honestly, for me, more importantly, forget the stocks. It is a national security problem. You cannot have one company, because China took over Taiwan. There's Taiwan Semiconductors. Taiwan Semiconductors, as far as I read, makes like 85% of chips around the world, right? And they go in everything you use on a daily basis. Imagine China, they already make chips, taking over Taiwan and now having control about 92% of the chips around the world. Do you have any idea how catastrophic that would be? Right, they already have still this day, I think like 73 to 75% of the rare earth mineral market. They were up to 90 at one point in time. Those are the things you need to make all those EV batteries and all that kind of stuff. So, it would be catastrophic on so many levels, right? So you're talking about a supply chain issue problem. If they invade them and actually went to war, what happens in war? Things get destroyed. Can you imagine if that plant was attacked and shut down, what that would do to the whole world supply chain issue when it comes to actually electronics? You have a glimpse, because this is what happened to the car industry. Remember Ford and GM and all of them, where they couldn't complete the cars because they didn't have the chips to do it with, right? So that's basically what you would have going on at a global scale, again, times 10 pretty much, because there would be so much uncertainty of what's going to happen. So that's why, to me, that's a huge issue and stuff. And again, somebody even said the other day, you back China in the corner, a wounded China is even more dangerous. That's usually how it works. And so that's just one of many issues going on with China and stuff. And yes, it tends to follow a slowdown. And so we'll have to keep a close eye on that and stuff. Let me know if you got any thoughts on that and everything. But, that's our mailbag, I guess we'll call it for the day. Let me know about you guys in the comments, answering some of those questions as well, and your thoughts. As always, enjoy reading them. I hope you have a good rest of your Saturday, and I'll set you up tomorrow for the week, and we'll talk about what happened Friday, and we'll set up for the week and stuff. So we still have more earnings, more economic data, and everything coming out and stuff, and how the charts and the news are going to set us up, okay? So I hope you guys have a good one, and I'll see you tomorrow.